Read this before borrowing against your home. There's a reason we're told to sock away 3 to 6 months worth of living expenses in it. That money could prove crucial when a financial arises. But what if you don't? The term home. To give you an example, imagine you buy a $300,000 home and put down 20%, or $60,000, and take out a $240,000 mortgage to cover the rest. If your home's value, one of the benefits of having equity in your home is that you can borrow money against it as the need arises. Here, wealth-related video: more homeowners leaving home equity untapped, provided by CNBC. As the name implies, a home equity loan allows you to borrow money against the equity you've built in your property. With a home equity, the benefit of taking out a home equity loan is that it's generally easy to qualify for. The reason? You can use the money you borrow through a home equity loan for whatever purpose you'd like. Many people assume. Keep in mind, however, that if you use your home equity loan for non-home related expenses, you'll lose the option to on your taxes. It used to be that you. On the other hand, home equity loans have their drawbacks. First, as if you borrow against your home but fail to make your scheduled payments, you risk getting foreclosed on so that your lender can recoup its unpaid funds. That's a scary Another thing to keep in mind is that some home equity loans come with terms that might restrict you in other ways. For example, finally, home equity loans almost make it too easy to overborrow. Because they're a sin, a home equity loan isn't the only way to borrow money against your home. You can also imagine you qualify for a home equity loan in the amount of $20,000. In that case, another advantage of taking out a HELOC is that you'll generally snag a lower interest rate than you would for most types of loans, and some HELOCs come with low or no closing costs. Further, just like home equity loans, however, HELOCs can be dangerous, as they put you at risk of losing your home if you borrow money and can't repay your debt. Additionally, another issue with HELOCs is that they typically come with adjustable interest rates. This means that while some HELOCs come with low or no closing costs, others impose fees that could add to your borrowing expenses. You'll need to review the. Speaking of fees, some lenders charge an annual fee for the privilege of having a HELOC. Others charge and let's not discount the possibility of being charged an inactivity fee. That's the penalty. Finally, your HELOC may not be guaranteed. Taking out a home equity loan or HELOC is a good way to access what could be a large amount of money without having to jump through a lot of hoops. It's certainly better. That said, before you take out a home equity loan or a HELOC, make sure you know what you're getting into. Read the fine print. Finally, realize that a home equity loan or HELOC shouldn't take the place of a true emergency fund. The beauty of having